Today is actually one of our open class, and in the open class for our postgraduate diploma in Islamic Finance and Management, this particular class will treat modern trend in Islamic finance. And as part of the arrangement that we had in the school, we decided to make this actually an open class so that other members of the society can also join from in and around of Africa. I've seen Pfizer from Ethiopia and other people joining, and more people will join, where we'll look at different things that have happened to Islamic finance in the last 2-3 years around the world, and relying most especially on the report by the Islamic Financial Service Board. We look this in today's episode of the program, we'll be looking at navigating the challenging global financial condition. You will agree with me that the last 5 years or thereabout has been very, very challenging for financial experts around the world. Starting from the COVID, before the COVID, the global economy went into recession. After the COVID, we went into recession, recovery, and recovery again. And a lot of economies have seen hyperinflations. Economies that have not suffered inflation in the last 40 years have suffered inflation. Nigerian being part of it. Even the United Kingdom, the economy in Britain has also suffered inflation, and all around the world. Today, we'll be looking at how did Islamic finance fare in the light of all of this. My name is Jubril Salahuddin. I'm the Director of Executive Education and Consulting at the Nungu Business School. I'll be anchoring this program this morning for our students and for everyone that is attending. And I thank you once again for being part of the program. So let's dive in straight. The objective of this course is that at the end, we'll be able to look at the global size of the Islamic finance industry. We'll look at the indices that defines performance in Islamic banking, takaful, asset management, and in sukuk. We'll look at the regional size of the Islamic finance industry as well as the global size of it. We'll look at the trends and where the market is looking towards. We'll look at the headwinds, we'll look at the tailwinds, and we'll look at how they affect the performance of Islamic finance around the world. The outline will look at the global Islamic finance market, Islamic banking performance indicators, Islamic funds, and that is talking about asset management and their performance globally, takaful market performance and the issues around adoptions. We'll look at sukuk market and the issues around product mix. We will not be looking at Islamic social financing. That is the only part that will be taken out in today's discussion. Okay, so let's get started. This is the global size of Islamic finance. In 2020, it was $2.75 trillion, grew by 11.3% in 2021 to $3.06 trillion, grew by 6.2% in 2022, and became $3.25 trillion US. Islamic banking part of it grew year in, year out by 6.9%, and share of the Islamic financial industry, it is 69.3%. Islamic capital markets grew year in, year out by 6.1%, and its share is 29.8%. And takaful year in, year out grew by 16.1%, and its share of the Islamic finance industry is 0.9%. Let me quickly add that if you have questions, please type it into the chat box, and I will deal with it as we go along. Okay, So we look at the global Islamic banking growth. The cumulative aggregate for 2018 to 2022. In terms of assets, 2.5%, with a year-on-year growth of fourth quarter 2022 of 6.9%. In terms of financial, 10.5%, with a year-in, year-out cumulative growth of 13.0%, and deposit, 8.6%, with a cumulative year-in, year-out growth of 6.0%. So we see growth all across, which shows that there are still a huge potentials in this market. Even though it's an alternative financing method, it shows there are huge potential because the trajectory is showing growth all through, and it's showing that this is growing at an arithmetic progression, and which means that this is a time where more fund needs to be brought into that industry. Now, the Islamic capital markets, growth of Islamic capital market, we saw a 2.3% growth in Sukuk issuance. That's global growth of Islamic capital market. And we saw an $830 billion Sukuk outstanding. We saw a 1% growth in Islamic fund and the market's correction in equity market. So which means that first, when we look at the growth in Sukuk, we see the primary market issuance rose to 190 billion in 2022. Outstanding Sukuk rose by 7%, which is 830 billion. We saw a growth moderated in the Islamic fund market, and we saw a growth of 1% there. And Islamic indices, like their counterpart, experienced volatility and negative return in the equity market. You know that if you've been following the markets recently, if you've done the chart between 2019 and 2022, you will see that there's a lot of staggered growth, especially when you look at the Jones index. You see a lot of lopsided growth, which shows negativity because a lot of companies around the world aren't doing well, and so their market, the equity market, actually took a dip. Yesterday, I was talking to a friend, and he said he doesn't know what is happening to people who are in asset management and are managing shares. He's seeing a dip, and I said it's global. So we saw some headwind as well as some tailwind. So in terms of the projected sense of optimism for further growth in 2023 is expected to be impacted by a number of headwinds and tailwinds. One, spillover of the effect of financial tightening in advanced economies. Most advanced countries are tightening their finances, making things much hard. Where there are inflation, they are exporting the inflation wholesales. And we see rising oils and commodity prices amidst inflation concern. So around the world, inflation is going up. We saw food inflation, even in Nigeria, went as high as 35%. So we saw Russia-Ukraine conflict, which creates a lot of issues around the world, especially for food and for supply, as well as for gas. We also saw a lot of exchange rate volatility. It affects a lot of African countries and developing economy. Financial stability risk is also there. We saw political impasses, social unrest, civil conflict, as well as climate change. Of course, for us in Nigeria, for the first time, we really had the real taste of climate change when it comes to heat wave all across Nigeria. Well, so those are the headwinds. The tailwind shows broader physical space in key jurisdictions. There are a lot of investment that should come into countries that currencies have been deregulated, like Nigeria. Increased digitalization and financial inclusion. We saw what digitalization did to us, and you can do quite a lot of transactions today from the comfort of your home. More digitalization will happen, but it will come in more controlled. And the Islamic financing industry have also keyed into this digitalization very seamlessly. We saw increased sustainability-linked investment. A lot of people are looking for investment that are sustainable. First of all, they're not asking for return on investment now. They are asking for return on their investments. We saw increased mergers and acquisition around the world. limited direct exposure to Russia and Ukraine conflict. A lot of people are quite careful with their finances, looking at that region. And so they have to look for other jurisdictions where they can put this money. So we took a look at the regions around the world, and we look at all of the assets in terms of their performance and what share they have for the Islamic finance industry. So we look at the Gulf Cooperation Council, the GCC region, Islamic banking, assets at 1342.9 USD, and these are in billions of dollars. Sukuk at 356.6 outstanding USD, Islamic asset at 24.1, Takaful at 16.7, and total showing 1740.4 billion USD with a share of 53.6%. So if you look at the entire universe of Islamic financing, the Gulf Cooperation, the GCC region, is actually in control of 53.6%. Southeast Asia is controlling 23.3% of this. Middle East and South Asia, which we call the MESA region, controls 18.6%, while Africa actually has 1.7%. Others, 2.7%, and the total is for banking, 2249.2, I beg your pardon, while for Sukuk is 829.7, for Islamic Fund is 136.6, and for Takaful is 30. We have a total of $3.23245.5 trillion. So for banking still take a lead of 69%, Sukuk 25.6%, Islamic Fund 4.2%, Takaful 0.9%. So we look at global Islamic bank size, the banking size, not the, at first I show you the entire financial size. Now I'm showing you the banking size. In 2019, the banking size in dollar is $1.77 trillion. In 2020, it moved to $1.89 trillion. And in 2021, it moves to $2.10 trillion. In 2022, it moved to $2.25 trillion. And that is the way we've seen the growth moving. That's the way the banking sector has been growing around the world for Islamic global banking size. So the global Islamic banking growth, cumulative 2018 to 2022, in terms of assets, is 2.5%. In terms of financial, is 10.5%, and in terms of deposit, is 8.6%. And so we saw a 6.9% growth in assets, a 30% growth in financial, and a 6.0% growth in deposits. This is the regional banking assets in USD billions. So the GCC region, start on my left here, grew in 2020, was 120 in 2021, and by 2022, it went to 130. You can see Africa there, still very flat, very, very flat, barely getting out of the ground. And that is to show that in terms of manufacturing, which drives an entrepreneurship, which drives financing, we're doing very, very little. We're doing very, very little. So the GCC is growing, Southeast Asia is growing, Middle East and South Asia is also growing, but you can see what Africa is. We're barely getting off the ground. This is Islamic banking share by jurisdiction and percentage in 2022. Before now, Iran used to be at the top front but they've been cut up now by Sudan, and Saudi Arabia has also moved up. Iran recorded 100% across board. Sudan, 100% across board. Saudi Arabia had 74%. Brunei has 66.2%. Kuwait has 51%. Malaysia has 31%. Qatar has 28%. UAE has 22.7%. Nigeria has 3.5%. Egypt is slightly ahead of us by 4.5%. Algeria is 1.2%. Kenya 1%. And Lebanon 0.4%. Across the jurisdiction around the world, Kuwait, Lebanon particularly, not Kuwait, Lebanon and Afghanistan's recorded the highest losses around the world for the year 2022. The report of 2023 will be available at the end of 2024. This shows the deposit Islamic banking assets in USD billion and the share of the global and the share of the global Islamic banking markets. So we saw the pink area are the global Islamic banking assets, the pink area, the light pink. The deep pink is the total banking industry. And you can see that dot there on South Africa. You can see Iran. You can see Iran there. The first one is Saudi Arabia. So the deep pink is the Islamic banking assets. The light pink is the global Islamic banking assets. And you can see how each of the country has actually fared across the board. So you can check the name of your country at the base, and you can try to equate where you are playing. For us, it's still very tiny when you look at what we are doing compared to other countries around the world. And these are for obvious reasons, which we shall deal with as we go along in this presentation. These are the key indicators for the assessment of Islamic banking resilience. The fact that when you look at Islamic banking and you situate it side by side at the conventional bank, the percentage is still relatively small, but you can see that a lot of resiliency has come into it. One, profitability, return on asset is one of the things we measure. We also look at the return on equity. We look at the net profits, we look at the margin, and we look at cost to income ratio. In terms of liquidity, we look at financing to deposit ratio. We look at liquidity asset to short-term liability ratio, and we look at liquidity coverage ratio as well as net stable funding ratio. For the funding structure, we look at the economic sector exposure of financing. We look at asset quality. We look at the performing asset as well as the non-performing asset, non-performing financing coverage. We look at the capacity adequacy, capital adequacy ratio, tier 1 capital to risk-weighted asset ratio, and we look at the leverage. So we'll take a look at the leverage ratio as well. So let us take a look at a few of these ratios to see how they've performed. This is the global Islamic banking average foreign currency funding and financing as a proportion of total funding and financing for thank you, 20 to fourth quarter 2022. So you can see the weighted average foreign currency funding to the total funding in the deep pink, and the light pink shows the weighted average foreign currency financing to total financing in the light pink. So you will see that there's still a lot of local currency financing. And another thing that Islamic financing must do around the world is to continually attract foreign financing into their portfolios, because this will help a lot. This is Islamic banking share of foreign currency funding and share of foreign currency financing as a proportion of total funding and financing by countries. How many were they able to, attract foreign currency funding to total funding is the deep pink, and the light pink is the foreign currency financing to total financing. And we look at Afghanistan there with 55% of foreign currency funding to total funding and 43% to foreign currency funding to total financing. So we are now taking a look at liquidity coverage ratio for standalone Islamic bank by countries, 2021 to 2022. Bangladesh. Look at they actually came down by 26.0% from 178.9% in 2021 to 22% in 2022. Kuwait, Pakistan is there. Pakistan actually went up to 239.4% from 210.5%. One of the things you will discover is that for most of the standalone bank, especially in Pakistan, the Pakistani in diaspora, they remit a lot of money back into their economy. And you will always see the impact of that in whatever they do. We now take a look at this net stable funding ratio for standalone Islamic bank by countries. And we'll take a look at Bangladesh, Kuwait, Oman, Pakistan, Palestine, Saudi Arabia, and the UK. The figure for 2021 for UK is not available, so we'll just look at the figure that is available for us for 2022. This is the financing to deposit ratio by countries. Afghanistan, Bangladesh, Indonesia, Iraq. And I mean, I'm quite impressed with the figure that is coming out from Iraq. Despite the turmoil in the country, they are still able to maintain a lot of deposits. When you look at the deposits to financing ratio, they're able to do relatively well in 2022. But look at the figure that is coming out of Nigeria. We're not seeing any considerable growth from 39 to 40%. It looks too close. It looks too close. And so we need to do something in this regard. One, the percentage is low when you compare it to total financing. If you look at Islamic finance in Nigeria and you superimpose it on total banking financing in Nigeria, Islamic banking in Nigeria superimposed on total banking finance in Nigeria is actually relatively tiny, is about 3%. So this is the weighted average percentage of financing and non-performing financing to selected economy sector. So we look at it from economy sectors now, and we look at real estates, 31.1%. And the weighted average in percentage for non-performance is 5.0%, which shows that the non-performing there is just 5.0%. And we look at household and personal sector, 22.1 to 9.3. We look at construction, we look at wholesale trade, and we look at manufacturing. So this is Islamic banking sectoral composition of financing by country in 2022. So we now look at this from countries now, and we look at Bahrain, Bangladesh, Indonesia, Kuwait, Malaysia, Oman, Pakistan, Qatar, and Saudi Arabia. Look at the figure from Indonesia. You can almost compare the Indonesian economy with the Nigerian economy. And you can discover that you are seeing growth in virtually every area. But of course, the household and personal financing moves up. And that is where consumption is. Once you have people having consumption going up, you discover that in that economy, there is a lot of cash around. So look at Malaysia, look at Qatar. There's a lot of cash around those economies because there's an exchange of buying and selling. A lot of it is going around. And that's why you find that the household is pushing up. Then look at agriculture. When you see agriculture, look at what Pakistan is doing with agriculture. And look at what they're doing with construction in Oman. In Bangladesh, Bangladesh makes the largest amount of ready-made clothes and apparels around the world. Most of the nose mask we use around the world comes from Bangladesh. Same thing for ready-made clothes for children, ready-made clothes for adults. Most of them comes from Bangladesh. And so they're able to push quite a number of that out. And we can see the effect on their Islamic banking sectorial composition. Okay, so this is then showing it graphically, how the sectoral performance has been across different time between 2020 to 2022. This is Islamic banking average gross non-performing finance to total finance by country, 2021 to 2022. And these are the countries where we got the figures. You can see Nigeria there is also there in the middle, 52, 5.2% to 5.0%. So the growth are just too close. Just too close. So you can see it's just so tiny. It's so tiny. So we need to look at it. One of the things that experts have actually pointed out is that we don't have enough product. Despite our numbers, we don't have enough products. And the level of poverty is also high. So we need to start looking at people and designing products that meet their status rather than just designing for the elites. So this is the sectoral composition of non-performing finance of Islamic banking by countries. Real estate, household, wholesales, construction, manufacturing, and agriculture. Sorry. So this is Islamic banking net profit margin by countries. How the banks are fared in terms of their net profit margin. In 2021, the Islamic banks in Nigeria made 39.4% net profit margin. They came down to 27.1% in 2022. So you can see different jurisdiction and how their profit margin has behaved. It is only in developing economy you see most of these two figures profit margin. In advanced economy, it is very difficult to see a bank making huge profits. So Islamic banking cost to income ratio by countries. What is their cost? What is their income? And for us, our cost to income is 49.1% in 2021, and it went to 64.0% in 2022, which means our cost is going up. This is the Islamic banking average capital adequacy ratio, Q4 2022. It dipped in Q2 2021, Q3 2021, it went up. Then it began to stabilize in Q4 2021. The weighted average for Tier 1 bank began to stabilize, and you can see some level of stability, but gradual growth up until Q4 2022, when the weighted average Tier 1 bank went to 17.8, and the weighted average total capital went to 19%. So this is the Islamic banking average total capital adequacy ratio for standalone Islamic banks. 2021 to Q4 2022. Now, let's take a look at the global Sukuk issuance and Sukuk outstanding trends, 2004 to 2022. If you look at the left side of your screen, you see from 2004 in USD dollars, billions of dollars in terms of issue, is about $5 billion issue. In 2020, in 2004, $10 billion issued in 2005, 22 or $30 billion issued 2007, and you saw a dip in 2008 and 2009. Then a growth in 2010, and exponential growth in 2011, more exponential growth in 2012, and the growth continued until 2016, until 2015, when we had a dip again, another dip in 2016, and by 2017, it started growing again. It went back to 2012 era in 2018 and moved up exponentially in 2019. 2019, of course, immediately after the COVID, a lot of countries around the world were issuing sukuk because they needed to bridge the gap between the recession in the economy and growth that they foresee in the future. And by 2020, they moved up, 2021, and by 2022, we have already hit the ceiling in terms of issuance into 200 billion USD, an outstanding of 800 billion. This sukuk issuance by issuers type, 2022. We saw multilateral organizations. They issued 8% of the total sukuk around the world. Corporate sukuk, 42% around the world. Sovereign sukuk, 50% of sukuk around the world. This is interesting. Now, let us look at the kind of contract that were used for the issuance of the sukuk and the countries. Let's start with the countries. This jurisdiction of origin now, the countries. Around the world, UAE issued 0.8% of the total global sukuk. Brunei, 1.7%. Bahrain, 2.5%. Turkey, 4.1%. Pakistan, 5.6%. Kuwait, 11.9%. Indonesia, 19.1%. Malaysia, 21.6%. Saudi Arabia, 31.2%. Gambia, 0.1%. Nigeria, 0.3%. Oman, 0.4%. And Bangladesh, 0.7%. So when you look at sukuk issuance, for us in Nigeria, we're still scratching the surface. We have not started. If we want to develop critical infrastructure, we need to look at issuing more sukuk to develop our infrastructure, not only in Nigeria, but across of Africa. Africa needs to do more. A country like Gambia has started with 0.1%. Gambian economy has been an economy that relies so much on foreign aid. But if those foreign aid stops coming, they're going to run into trouble. So this is the time for them to issue more sukuk so that they can grow their economy and grow critical infrastructure that will propel growth in the economy. These are corporate sukuk issuance by jurisdiction of the originators. These are all the corporate sukuk. These are the countries where they all came from. Kuwait, 0.6%. Senegal, 0.6%. Bahrain, 1.1%. Indonesia, 1.9%. UAE, 5.0%. Saudi Arabia, 19.6%. Turkey, 22.5%. Malaysia, 47.2%. 47.2% corporate sukuk. Nigeria is 0.1%. South Africa, 0.04%. Tanzania is 0.01%. Pakistan is 0.1%. Egypt, 0.2%. Qatar, 0.3%. Jordan, 0.5%. So if you look at it again, following the same trajectory that we had for sukuk issuance by jurisdictions and the percentage, we still have not done well. Even in the corporate sector, in terms of developing businesses, we need to issue more sukuk. This total sukuk issuance in USD billion by domiciliations. Malaysia, Saudi Arabia, Turkey, Indonesia, Kuwait, Pakistan, UAE, Bahrain, Brunei, Bangladesh, Senegal, Nigeria, we are hardly seeing. It's difficult to even point it because you can't see the point there. And this is how it has behaved by domiciliation 2022. And these are the sectoral distribution of global sukuk issuance. In the real estate sector, 1.0%. Consumer discretionary, 1.8%. Egypt, energy, 1.9%. Egypt actually issued one of the largest sukuk in terms of energy, and that was what put the energy sukuk up by 1.9%. Utility, 1.9%. Industrial, 6.2%. Financial, 32.1%. Government, which are sovereign sukuk now, 53.8%. Consumer stable, 0.2%. Communication services, 0.6%. Materials, 0.6%. So you can see that between government and financial institutions, they are controlling the issues of sukuk. And if we want to develop the real sector, we need to start to look at energy, particularly if we're looking at Nigeria and we begin to look at the energy sector in Nigeria, we need to see how we can issue more sukuk. Manufacturing, we need to look at more sukuk, and consumer stable, we need to issue more sukuk. And for people who are investors and plan deals, this slide is particularly useful for you, and you can see the direction. And this is a way to go. This is a sustainable related and green sukuk issuance. You will recall that about 6 years back, between 2017 between 2017 to be precise, 2016 to be precise, the world started talking about the green bond. And as well, people who are financial engineers within the Islamic space started looking at green sukuk. These are sukuk that have impact, not just on the monetary impact, but also on the environment. And that is what the directive of the Sharia is, that as Muslims, you must protect the environment. So a lot of emphasis were placed on green sukuk and sustainability-related sukuk. So sustainability-related sukuk is there, and in 2017, you see what it is, and in 2022, you see how it has grown. Green sukuk grew by about 3,100 in 2022, while sustainability sukuk hit the roof at 8.7 thousand at the same year in 2022. This is the sukuk issuance by market in 2022. Foreign currency and international issues are 22%. Local currency and domestic issuance, 78%. All the sukuk that we have issued in Nigeria are all domestic sukuk. We need to start looking at foreign sukuk as well, so that we can attract forex into our economy. Most of the sukuk in Nigeria are sukuk that are local currency based. So we need to start looking at something different as we go along. So a mixture of local and foreign currency will do us a lot of good. Now, I spoke about the structure earlier on, and these are the forms that the structure has taken for 2022. Mudaraba, 5.3%. Ijara, 16.9%. Others, 7.2%. Hybrid, 17.7%. Murabaha, 24.8%. Wakala, Bi-Istidma, 27.3%. And Musharaka, 0.8%. All of the sukuk that we have issued that are sovereign sukuk in Nigeria are Ijara sukuk, except the one issued by Taj Bank, which is a Mudaraba sukuk. This is the growth in asset under asset management. So we start looking at asset management companies now and their growth. This is how they are fared between 2008 to 2022. We're seeing that more growth are coming from them, even though the funding and the cash available in the asset management side are tiny compared to banking. This is Islamic fund asset by class, 2022. The UAE fund is 0.7%. The JSF fund is 0.6%. Others 1.3%. Malaysia 38.1%. Saudi Arabia 27.5%. United States of America 7.5%. Luxembourg is 6.3%. Indonesia 3.3%. Pakistan 3.0%, South Africa 2.4%, and Cayman Island 1.1%, while we have Singapore at 0.7%. It is difficult to see that of Nigeria because the numbers are too tiny. You can't plot them. They don't fit in here. And the Islamic asset management firm in Nigeria are barely 6 or 7. Normal Islamic fund by asset size. And this is how they have grown from 2016 to 2022. We've seen exponential growth, which is good, but it's still tiny when you subsume it into the conventional asset management fund. It's still tiny. This is performance of Islamic indices versus global indices of the Islamic fund. We took the S&P Global 1,200 and the S&P Global 1,200 for Sharia. So the light pink is the Sharia, while the deep pink is the global. If you look at them year in, year out, you see that the Sharia compliant asset is growing in terms of percentage faster than the conventional in percentage. Trend of global takaful. So let's look at takaful now. This is what the global takaful has looked like between 2011 to 2022. Now, this is takaful contribution growth rate by countries in 2022. Saudi Arabia, 11.84. Malaysia, 1.47. Oman, 0.06. Pakistan, 0.10. Bahrain, 0.04. Jordan, 0.10. Egypt, 0.59. Qatar, 0.86. Turkey, 1.74. Indonesia, 0.24. Kuwait, 0. Brunei, 0.03. Now, this is a share of takaful sector business relative to insurance sector percentage in 2022. Saudi Arabia, Iran, and Sudan have gone full-blown Sharia compliant. They are 100%. Brunei, 35%. Malaysia, 27%. Kuwait, 23%. Oman, 15%. Medvis, 15%. Bangladesh, 14%. Palestine, 14%. Bahrain, 14%. Pakistan, 14%. Jordan, 13%. Egypt, 13%. UAE, 8%. Qatar, 8%. Tunisia, 5%. Indonesia, 4%. Turkey, 4%. Sri Lanka, 2%. Nigeria, 1%. Kenya, 1%. Well, while you might say the number from Nigeria is dismissal, even the penetration of insurance in Nigeria is dismissal. If you put both conventional and Islamic together, total penetration is less than 4%. So this is the contribution of top 7 takaful markets in the world, which are Saudi Arabia, Iran, Sudan, Brunei, Malaysia, Kuwait, and Oman. This is their contribution. We need our name to appear in this top 7. And to do that, we need to do a lot of work. As operators in Nigeria, operators need to look at the market differently. They need to come up with more innovative products. Their marketing needs to be different. They can't afford to sit on the fence. They need to push up the numbers. And we need people to also support them. We know that the environment is hostile to them, but we need to soften that, and we need to attract more funding into that sector. This takaful contribution by key regions: GCC, MESA, SEA. Africa is still very tiny, like I said, and these others. There's a lot we need to do around of Africa, a lot that we need to do around of Africa. This takaful return on assets. When you look at the return on asset for takaful, it's actually a lucrative business. It's actually a lucrative business, because look at Malaysia return on assets. 2022, 7.3. 2019 to 2021, 9.39. This takaful return on equity percentage 2019 to 2021 and 2022. So the return is promising, it's very good. It's good, very promising. Except for Kuwait. Kuwait 2019 to 2021, the takaful return on equity was slowed down for a lot of things that happen within the country. Okay, so rounding up, this is what we do at Nungu Business School, the PG in Islamic Finance and Management. These are 5th intake, the current class, which will have all member of class are in here, the 5th intake, and the participants are from different professional backgrounds, from law, banking, takaful, insurance, education, mining, different areas. They're here. And we have compressed the 9-month program now into a 6-month program, and it is 100% instruction-led online. Facilitators are seasoned facilitators and practitioners around the world, come from Nigeria, Gambia, Pakistan, Malaysia, Indonesia, and the United Kingdom. The course pedagogy is a mixture of case, slide presentation, student presentation, assignment, debate, deep dive, analysis, and demonstration. The course assumes a zero knowledge of both Islam and finance. And we are the most affordable PG of this standard in the world. These are our contacts, and we end today's class. If there are questions, we'll take them. And if there are not, we say thank you. So question, please, if you have questions.
Thank you, sir, for the wonderful presentation. Please, can you share the contact page again? Thank you.
Thank you. I'll do that.
Assalamu alaikum, sir.
Wa alaikum salam wa rahmatullah.
Jazakumullahu khairan for a wonderful lecture. I was wondering if you could shed more light on the program.
Yes.
How it runs, the fees, in case we are interested or something, sir.
That's why we put the contact there. You can get detail of that from the contact. Once you call the number or you send the email, you get everything you need. We're afraid that we will have less time, and that's why we're trying to do this.
Okay, Jazakumullahu khairan, sir.
I mean, yeah. But in terms of how it runs, we run online, so it's flexible, and the classes are also recorded, and our students have a lot of interaction. For today, you see they are not popping into it. We tell them, stop the facilitator at any time and ask your questions, and that's how we do it. And we have a lot of assignments as well. And those assignments, some of them are group presentations, some are individual, and that's what we do.
Well done, Doctor, and thanks for the session. What I would say is that considering the level we are in Nigeria in terms of the opportunities for Islamic finance, I would say we continue, just to commend Nungu effort to say that let's continue to move that envelope, to push it, so that we expand the opportunities. For instance, I've seen some communication regarding the recently released protocol, for the consumer credit, for instance. And there are concerns around how Nigerian Muslims, the community, would be carried along fully. So Nungu Business School may want to drive conversation in some of those environments, and begin to, lead some of those interactions. Of course, with several other professionals in the space, so that at the end of the day, the entire community is better for it. And again, well done to the team there. Thanks.
Thank you very much, Dr. Avis. Thank you very much. We have sent in a paper to the consumer credit, and we've told them that we are willing to provide them free services on how to structure those credits to meet the demand of a large number of people who will not subscribe to an interest credit system. We've sent that proposal to them, and just like we did to the Federation of Cooperative, with collaboration with Zero Interest, we've sent that proposal to the credit scheme, and we're engaging them. We are also talking to the Institute of Islamic Finance Professional in Nigeria so that we can also team up together and send another proposal to them to offer this service to structure product for consumer credit that will lies on Sharia principles. Thank you, sir. Thank you, Badejo Adedeji Nuruddin. Thank you very much. We saw this. Thanks. Amin Allah. Thanks for the prayer. Halima, thank you very much. You are right. A lot of people are not aware. A lot of people thought that Islamic finance is just for the Muslims. It's not just for the Muslims, it's an alternative financing system. And you are right, Halima. These are areas where we need to put a lot of emphasis into and ensure that we all benefit from it, particularly aspiring entrepreneurs. Thank you, Lukman. Thank you, my teacher, Abdul Hakim Abdul Salam. Thank you, everyone. All right, Sister Adoge, thank you very much. I appreciate this. Brother Juf, joining us from Gambia. Thank you, Zakallah. Thank you very much. All right. On behalf of everybody in Nungu Business School, I say good morning and thank you for joining us. Till we meet sometime again. Bye-bye. Assalamu alaikum.
Bye.
Wa alaikum salam, sir. Thank you so much.